welcome to the Trading Market Technicals Morning Call video for Monday, January 28th. I hope everybody enjoyed their weekend. Today, back to the markets. Quick recap on the markets itself. Look on the board here. We had green basically across the board for the key sectors that we're looking at. Dow Jones, S&P, Russell, all up 1.8, 1.14, 1.39%. NASDAQ down slightly because of Apple. We'll talk about that when we get to it. Sectors looking really great here. Semiconductors, transportation on fire, up 3% for the week last week. But we're going to see if there's going to be any profit taking in the transportation sector. Utilities up, which is actually kind of weird. Healthcare up, drugs up. Home bills up 2.5%, and then of course we had our metals, precious metals down because a lot of people, when you get so complacent in this market, there's no reason to park money in gold and precious metals if there's no fear out there. But we'll also look at the VIX as well. So pretty good week. We've had actually a pretty good month for the longer term investor and the position trader and swing trader if you're looking to hold. And these videos are to keep the traders on the right side of the trade. And I got a lot of emails, and I'm glad everybody's enjoying them and it's helping them. For the day trader, lack of volatility. Obviously, it's going to be a slow month for everybody. But let's keep everything in perspective. I have a lot of charts here. I'm going to roll right into them. A lot of indicators. A lot of them are pretty much the same. But we have to be aware that the market has gone way too far, way too fast on no volume. So we do need to expect some sort of a pullback. And for the longer term investor, the position trader and swing trader, whether you tighten your stops or use protection, is really a wise thing to do here. Now, if we continue to grind higher with no pullback, the pullback or the correction, if you will be probably harder and faster to the downside. So just make sure you're aware of that. And if you're willing to ride through those bumps, you have to understand that there's a lot of longs here now buying into this market up at these areas. Longer term picture, 1575 in the S&P. I'll show that to you as well when we get to the charts. That's going to be really our ultimate target. That is the ultimate high, but that's something that we'll look at later. So let's take a look at some of the sectors. All green across the board. Technology here faring a little bit obviously behind. And seasonal tendencies, they're actually coming to an end. So the technology sector to be expected, but also again big help from Apple. Why technology didn't fare so well. Take a look at that's our performance board. I would like to show you now some of the indices itself. As you can see, gold major down week. Dollar actually just really holding in here in range. I'll get into charts as well. And then of course Russell mid caps. I love to see the S&P mid caps and the Russell really leading this pack here. It's really key. Risk on sentiment. That means that people are willing to put money in riskier assets, and that's actually a very good thing. In the longer term, like I mentioned on Mondays, the longer term picture very well constructive to the upside, long term bullish, unless something obviously changes. That can change at any given time, but the charts longer term look fantastic. Short term, we still have a short-term trend is to the upside, but we are very extended. Now, that can happen, and that can stay that way for another week or a month. No one knows. So when we look for triggers to get short, we need a reversal candle. We need to take out the previous day's low, and then we need to start making lower lows and lower highs. That's going to give you a cue to say, hey, a short-term tradable top is in place. And that's what I mean when I say we need a trigger. Very important when you're trading. You don't want to be short and looking to say, oh, I think we're extending here, I'm going to put a short on. No, that's not a valid short setup. Just want to make that clear to everybody. All right, let's run into some of these, some of our indicators here. And then some of them you're going to see the same. Our NYMO hasn't really done much, but what is telling me is that the market has room to run to the upside before we really get extended. Now, some of our other indicators are already extended, so that doesn't happen. It has to happen. If the markets do decide to roll over, this could just start to move lower, but has plenty of room to run before we get oversold. And I like to see a really oversold reading of about 60-ish to 70 before we really get oversold. So this is telling me that we do have room to the upside, and we have plenty of room to the downside on the NYMO. Okay, let's take a look at our NASI and the New York Stock Exchange Summation Index, the weekly. I have a RSI here. We are overbought. Excuse me. If you look at other previous overbought readings in the weekly chart, we usually tend to be right up into this range, that 65 to 70 area. And as you can see here, we hit it. And here, and here, and here, even we hit up even the 70 area here, and we're approaching that now. Now, don't forget, this is 9 out of 10 weeks up, so a pretty impressive move. This is a great indicator, catching tops and bottoms. Again, this is just an indicator. Price is king. Price leads us prior to our indicators. That'll just confirm what price is doing. Okay. Now, I want to show you the another NASI, and this is plotted with the composite daily chart, and as you can see, we are at these lofty levels here. Okay, still room to run up in this area here if it really wanted to. And again, we're overbought in our MACDs here, and just something that I wanted to point out. And here's a NASI New York Stock Exchange Summation Index, and this is plotted with the RSI, a CCI Commodities Channel Index, and the S&P weekly chart. Now, this is a weekly chart, and as you can see here, same thing. 9 out of 10 weeks up. We are elevated on our CCI, on our RSA 5, and also look at the weekly chart of the S&P. So again, this is just red flags, a word of caution. Can it move higher? Absolutely. For me personally, and I've mentioned this many times, I'm just looking for quality day trades. Cash is a position. When in doubt, if you are uncertain or uncomfortable where the market is right now, wait for that pullback to buy into the market, and it will happen. It will happen. Take a look at our S&P ATR chart, and we are down, way down here in these areas. Once we get up here, as you notice, that the market starts to roll, and then we look to pop and we start rolling back to the upside. So just watch here. Keep an eye on this ATR, really at the low levels here. And again, actually, when you get to these areas, can stay low as for a quite period of time. So this S&P can actually get to 15. Really, we have one spot around 1520, small pivot, and then we have our main high, which is 1575. Don't forget, guys, we have 5-year highs since 2009 down the S&P has made last week. Pretty impressive run, but again, that's a big help from the Federal Reserve. So just also keep that in mind as well. Here is our new high, record high NASDAQ. Again, elevated at 100. It's been this way all through January. It has not moved. Again, just showing you a big overbought reading. Take it to new high, new low. Back up in this area here. Again, really at these elevated areas at 1502. And we're up at these areas where market usually tends to pull back. Again, that does not have to happen. The new high, new low daily can actually spike back up and take out this high as well. But just letting you know, we see warning signs. Now, what we're looking for, we need to see price. We need to see price cap itself and start making lower lows, taking out previous day lows, outside day reversal. That's what we're looking for. Okay. Now let's take a look at copper, and I want to show you copper weekly. The copper weekly chart here looks very impressive. We're getting way into the apex of the symmetrical triangle. So this is telling me that energy is building in copper, and my guess would probably be a break to the upside as the way this market is going, very bullish. RSI is not overbought, so stochastics are overbought, and our MACDs are above, just slightly trying to break above zero. So plenty of room to run to the upside on copper. Take a look at the daily. You'll see this larger symmetrical triangle here. Nice big take, a break above 375 on a closing basis will probably send copper running higher, and a lot of the miners, and that will also put a bid under equities and move higher as well. So this is something that we're going to be looking at this week, because copper is definitely a leader, industrial metal, so it is a leader. They call it Dr. Copper, as everybody knows. So something really to watch here. Take a look at our tick chart. Extremely elevated. That's a big concern for me, but again, I'm not swing trading right now. I'm just looking for day trades. So this indicator at these lofty levels, breaking above all of this could happen as well as the other indicators. But again, guys, remember, if you're holding positions, I would not be looking to add new positions at this time. Okay. Now let's take a look at our VIX. VIX starting to tick up a little bit, meaning that there is getting a little nervousness in the market, saying, well, we come a little too far, too fast. And we do see the VIX starting to just ever so slightly start to tick up again. It looks like a lot of investors and long-term traders starting to buy puts, protecting their portfolio. And rightfully so. I mean, the premiums are extremely cheap. And that's something that that I would be doing if I was holding stocks. All right, on Friday I mentioned bull flag here, breaking that symmetrical triangle. Watch the yield. The yield is going to rise. What happened Friday? Rip right through the upside. This is actually a big move for the VIX. Now we just took out the symmetrical triangle and the bull flag. The U.S. 10-year yield. So that drove bonds lower. So bonds are coming, money is coming out of bonds and going into these other sectors. They're just totally getting out of bonds and bidding the market. And they're bidding the market up in this lofty area. So watch, because if the yields start to take shape, people and traders will be getting out of their bonds and getting out of their equities and their other asset classes they're investing in and putting them back into bonds. So that's not going to be good. So just kind of watch it. This takes a little time, but it's interesting to see on Friday when I saw the big take. We had a little pop out of that that bull flag right here. And we had a big follow-through on Friday. So this is something that I will be keeping an eye on a regular basis. All right, so let's take a look at the charts. Let's take a look at our indexes. Here is a monthly spiders chart. Again, we are in this channel, very constructive from 2009, higher lows, higher highs. And this area here, which is the monthly S&P spiders, is looking at, this is going to be the target of 156. Can we get up there this week, next week? Absolutely. I would not deny that. 1575 is the same area in the S&P cash. Okay? 1575 resistance, 156.35. Call it 156.50. That's going to be your area, your cue to look at that at a short-term top and a big top, no less. As you can see here, we're overly elevated in our S&P stochastic and our MACDs. And volume here has been light last week than the last previous weeks. Something to keep an eye on. Okay, here's our weekly chart of the spiders breaking out of this this trend line. Actually looks like a big ascending triangle. We are at the upper end of this range on this weekly channel, this uprising channel here. So something to keep an eye on. If we do break out of this, then that 156 will come into play. There's a daily chart of the S&P SPYs. Again, no change. 151 here is going to be our inverted head and shoulders target. As you can see, we've had this on for a couple of months now. We are 75 cents away. Right now, just a quick note, the E-minis are up about 75 cents. Not really much of anything. So we'll see if we can get there and reach this target area and then start to pull back. Again, guys, keep an eye on this gap area. We have at 144, 142. I'd love to see this pull back, at least back to the 20-day, and start nibbling in short. Start looking to buy short. Start looking to buy as the market comes in. S&P weekly, this is the S&P cash weekly chart. Look exactly the same. We have two trend lines here. Held the upper trend line on this blue line, and now we are just breaking out of this upper area. So 1575 is going to be the big target area in the S&P weekly and the monthly chart. Okay, inverted head and shoulders on a daily. CCI hanging above 100, which is a good sign to see. And 1520 will be your first target of the inverted head and shoulders. Again, we're looking about 18 points away. We could get that today, actually, if market wanted to. So again, guys, most of these inverted head and shoulders are near or at their targets already. Okay, 1476 on the downside is what I'm looking for a confirmation break and that a short-term top may be in, and that'll be on a closing basis. So 1476 is what I'm looking for here, and then of course our new low would be 1398, 1400 area. All right, so that's something that we're going to be looking for a longer-term pivots, and this is something I'm watching closely when the market does decide to break lower. So that can change if the market does break higher. So really our new pivotal support area will be at the 1476 area. Okay? And S&P 30-minute chart, we did break out of that little area of support, and we've just been grinding higher the last several days, and now we're starting to get a little bit more tighten on the Bollinger Bands. I'm going to see if we do break out one more time before we head lower. That can happen. Diamonds, inverted head and shoulders on the diamonds. I don't have the mark here, but I think we're really at the target. I'll put that in tomorrow morning for tomorrow morning's video. IYT Transports. Big move on Thursday. We had a follow through on Friday. Now putting a reversal candle. 103.19 in the IYT. That's the area to look for. That's Friday's low. Look for a break lower. That should put a tradable top in if you're looking to trade the transportation sector, and or at least advise in watching the transportation sector, because as the market starts to roll back in and the transport start to lose its luster a little bit, that should put a little help to the equities as putting a top in, at least in the short term. So what big move out, guys. Really great move. That's exactly what you want to see if you're a longer term investor. Transport's really participating in this move. But again, as you can see here, look at how steep this is. Eventually, it's unsustainable. The market is going to pull back at least to the 20 or possibly to the back to par. But that's something that we're going to keep an eye on as well. Transportation really big here. IWMs, as you can see, IWMs has now exceeded our target in our head and shoulders pattern. So this target has been successfully done in our inverted head and shoulders pattern. But again, guys, just grinding higher here. We did have some decent volume on Friday, but what a slow day on Friday it was. The first 15, 20 minutes, and then the market just grinds all day. All right, so now let's take a look at Apple. I want to show you the Apple weekly chart here. This is where I had on this one longer term from back in 2003. We actually hit the trend line, the low of 438-ish or 439, I believe, in Apple. Now, this has been hit. Now, the question is, where does Apple really go from here? Now, I want to show you something. This is what I'm looking at, repetitive patterns. If you look at this area here in Apple, we actually dipped below 30 in the RSI. We are at that now. So I say that if we do break below 30, and we really need to watch this closely, we could literally flush to the 388 to the 400 area really quickly. So I'm looking at this area. I'm watching the RSI on the weekly chart, and I'll see if that helps. Now, that doesn't have to happen right away. Obviously, it can hang around here, but the longer it hangs around this trend line, the worse it's going to get, because as this trend line support holds, eventually should break and should go to 400 or 388 would be really the one side, another possible target here. So that's kind of scary if you're holding this Apple. So I would use a lot of caution. Again, I don't think Apple is a buy as of yet. I want to see itself making higher highs and higher lows, and that has not done so. We had a big weekly close. We need to see Apple take at least 50% of that weekly chart, of that weekly bar, and that has to happen, and that has to get back above the 477, 480 on a closing basis. Ultimately, I like to see 500 by the end of this week. If Apple could get it back above 500, then I think you have a short-term tradable bottom where Apple would probably correct back to the 580, which would be the 200-day, and then ultimately I think would start to roll back over again. And again, we take it one step at a time, but this does not look healthy. And again, here are my targets here. Break below 460. We could see 420. We actually got as low as 433, 436 actually. So something really to keep an eye on in the Apple. Really does not look good, guys. But again, we need to break above at least 50% of this candle by the end of this week. So let's see what happens on the Apple daily chart. Just wanted to show you that head and shoulders pattern on a daily chart. Hit our target of 460-ish. Now, 434 looks like that was the low. But again, guys, we do have our MACD and stochastics trying to make a little higher high, higher low. But again, keep an eye on it. Not looking too pretty. We could get a tradable bottom, but it needs to really start at least basing here, making small higher highs and higher lows, and then we can get some sort of a tradable bottom. But again, needs a lot more work. And then again, lastly, the Qs. Just sitting here in this channel. We'll see if the Qs can break out here. And again, not helping is Apple, obviously heavily weighted in the Qs. Right, guys, have a great week. I know this is a longer video, but I want to get a longer term. Sometimes like to show you the weekly charts and the monthly charts on Mondays to really start the week. Non-farm payrolls come out on Monday, which is February 1st. Always a big number, so let's keep an eye on that. Hopefully we get some volatility come in this week, and then we can start picking up on our trading, on our day trades. All right, have a great day, everybody. We'll talk to you tomorrow.